there, very good morning. Welcome to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Ankita Saxena. Over the next 1 hour, we'll take you through all the global and domestic cues that you need to keep an eye out for and also tell you about the stocks that you need to watch out for today before the start of T Street. But let's get started with an eye on the globe. First up, let's take stock of how the US markets fared overnight. Well, Wall Street is riding high on Thursday, that is overnight. The Dow jumped over 600 points to close above that 46,000 mark for the first time. The S&P 500 that also gained nearly 1%, whereas the Nasdaq Composite that advanced about 0.7%. Now, all three major averages they did end at the record levels. Now, this move came as investors are weighing hotter than expected inflation data, but they're more focused on weak jobless claims, which hit the highest level since October 2021. Now, this shift has boosted bets that the Fed will cut rates next week itself, with the futures markets pricing in a quarter-point cut almost for sure. Now, for the week, all three indices are up about 1.5%. The S&P 500, in fact, is on pace for its best week since early August. Nasdaq is set for its second straight winning week, whereas the Dow that is snapping a 2-week losing streak. Now, looking ahead, all eyes are going to be on Fed's September 17th policy meeting, where that rate cut decision is due. It could set the tone for the markets in the weeks ahead. Well, that's about the US markets, but let's next talk about how the commodity market is shaping up. Ankita, how are crude prices looking?
Well, Kanishka, oil prices fell on Thursday, pressured by concerns over softening U.S. demand and broad oversupply that offset the threats of an output from conflict in the Middle East and the Russian war in Ukraine. The Brent crude futures were down $1.12 or 1.6% to close in at $66.37 a barrel, and the WTI futures lost almost $1.3 or 2% to settle in at $62.37 a barrel. Now, oil prices are falling in response to the bearish IEA headlines, which suggest that massive oversupply on the oil market is likely next year. Now, the International Energy Agency had also said that it's a monthly report that would the world oil supply will rise more rapidly than expected this year on OPEC Plus's increase output further. Now, however, the OPEC Plus report, published after the IEA's kept on non-OPEC supply and demand forecast for the year unchanged, citing steady demand. The organization, now remember, the OPEC Plus allies group collectively has decided on Sunday to raise the production from October, and the market is now torn between a perceived supply shortage due to a rise in the tensions in the Middle East and the Ukraine, and an actual oversupply from a higher OPEC Plus production and the swelling stocks. On the back of that, we did see oil prices moderating a bit from the three-session gains that we saw coming in on oil. We did see a bit of a moderation coming in on the back of an oversupply concern.